Hello and welcome to the Personal Financial Strategies Incorporated October 2017 Economic Update. A very interesting series of articles caught my eye just recently. These articles centered upon stock market valuations and so-called black swan events. A black swan event is an occurrence that is different from what is normally expected and is therefore extremely difficult to predict. Black swan financial events are typically random and unexpected. Recent examples of black swan events include the 2008 financial crisis and the U.S. housing market crash, and the 2001 dot-com bubble when America was enjoying rapid economic growth and increases in private wealth before the economy suddenly collapsed. I share this with you now because of the current overly optimistic view on Wall Street and Main Street. The current bull market started way back March 9, 2009, and it is now 78% longer than the average bull market. Stocks are not cheap. Using Warren Buffett's favorite measure of stock market valuation, which is comparing the value of the stock market to U.S. gross domestic product, we can see that the U.S. stock market is 30% more expensive than GDP. And the Shiller 10-year cyclically adjusted price-earnings ratio shows similar overvaluation. According to a study by the University of Michigan, the Consumer Sentiment Index, which is a survey of consumers' confidence, hit an all-time high earlier in October of 101.1. This is only the second time that this survey has resulted in a mark of 100 or more since the record 1990s expansion. According to the study, more than half of all respondents expect good times during the year ahead and anticipate continued expansion on an uninterrupted basis over the next 5 years. As a long-term financial fiduciary to our family of clients, I always worry when it appears that it's too easy to achieve gains in the stock market. For this reason, I want to share with you a conversation about these black swan events. According to a recent article in a popular financial advisory magazine, Stephen Cucchiaro, an MIT-educated economist, built a list of 8 black swan events. Here are 5 of them. Number 1, a record amount of money is shorting the VIX, which is the volatility index. What would happen if some event or change in the environment took place? What would happen if there was a great deal of short covering of the VIX? This could turn a minor correction into a major one. Black swan event number 2. Kim Jong-un has been shooting off missiles in North Korea without consequence. What would happen if the U.S. military strikes against this nation's nuclear facilities? What would our allies do? How would the financial markets react? Black swan event number 3. Gridlock in Washington looks to be worse than ever. Even so, the U.S. stock market has climbed by more than 15% since our November 8, 2016 presidential election. What would happen if the tax cuts don't go through? What happens if healthcare reform truly falls by the wayside? Black swan event number 4. What about increasing tensions between Iran and Saudi Arabia? What would Russia do? What would their stance be? Right now, Russia's oil-dependent economy is suffering from Western sanctions and low petroleum prices. What can Russia do to retaliate against these Western sanctions? What would that do to the financial markets? Number 5, what about a bond market meltdown? After a 35-year, basically uninterrupted rally in bonds, interest rates still remain at historic lows. If rates move to a normal range, stocks will become more attractive as bonds become less attractive. Could this cause a major downturn in the U.S. market? Even among our long-term wealth management clients, I see signs of irrational exuberance. It seems that many clients have forgotten that their stock market investments fell 35, 40, even 50% during the 2008-2009 economic meltdown. I am a firm believer in history and that history always repeats itself. So, what to do? As always, follow the written plan of action that we have in place for you. Do not be afraid to take gains when the gains appear to be much higher than they should have been. After all, you can never lose money taking profits. Also, consider having a conversation with your PFS advisor about setting trailing stop loss orders. This is a reasonable way to protect gains from downside risk. Next up of significance is President Trump's choice for the next head of the Federal Reserve Bank. He has chosen Fed Governor Jerome H. Powell to fill Janet Yellen's current position in February of 2018. Mr. Powell has voted in favor of every Fed policy decision since 2012. He has been Janet Yellen's ally in monetary policy, while also calling for some easing of the regulations on banks that were put in place after the 2008 financial crisis. So it looks like we are staying the course with the current monetary policy. Finally, in the world of what's happening at PFS, we are pleased to welcome our newest financial advisor, Rob Geller. A former financial advisor with Morgan Stanley, Rob was also an executive vice president with 3 private equity fund companies. Rob is a graduate of Northwestern University, both for his undergraduate education and his MBA. We are very pleased to welcome Rob to the PFS team as he will be adding more depth to our financial planning process in the world of comprehensive wealth management and retirement planning solutions. As always, please reach out to us at 847-268-3670 with any questions you may have. We look forward to speaking with you very soon. Yours truly, Les Goldstein. And now, for the required verbal disclosure that I always have to read at the end of these monthly updates. While we believe that the information contained herein is reliable, we cannot guarantee its accuracy. Opinions expressed herein are subject to change without notice and are not intended as investment advice or the solicitation for the purchase or sale of any investment security. Please consult with your financial professional before making any investment decision. Thank you.